Are we? Fantastic.
Letting people jump on.
All right. Well, welcome everybody. We're gonna get started. This is an Ask a CPA session. So basically, question and answer period. Here to answer any questions you might have. If you're on Facebook Live, feel free to ask a question, and we'll answer it. Daryl Johnson's got us recording here, so we'll take care of it. So just a little bit about me. I'm a CPA. I'm actually based out of Phoenix. That's where my office is. I travel up here periodically to help out business owners in this area as well. And ultimately this is an objective to really save people some money on their taxes. So that's the ultimate goal here. If you're a business owner, it's a great way to build wealth. Hashtag build wealth. If you're in small business, hashtag small business. And if you're on Instagram or Facebook or whatever, you can find me using the @ Ignatius CPA. But I've been doing this for over 10 years, about 12 years roughly on all. Been in the accounting field and have my own firm for about 5 years now, and really just focused on saving small business owners a bunch of money. We have a workshop coming up. I'll just mention that on November the 9th from 9 a.m. to 12 p.m. That will be here in Kansas City at Wingman Realty here on State Avenue. I think it's 5008 State Avenue, if I'm correct on the address. And that will be a phenomenal workshop. I mean, we might touch on some items here today, but during that 3-hour workshop, we go through a lot. There's a lot of ways to save on your taxes, a lot of ways that people just don't know about. And that's going to be a phenomenal way to learn about that. So if you weren't able to make this, definitely sign up for that. So that said, I mean, we'll just start it off. I mean, if anybody in the room has any questions that they would like to ask, we can get started with that. No?
Well, I'll ask a question.
Okay.
So for the purposes of setting up an LLC to put your business under the LLC, first of all, can you just tell me what the benefits of that are?
Sure. So an LLC is not going to save you money on your taxes in and of itself. Okay, it depends on what you do with the LLC that will potentially save you money on your taxes. So an LLC, though, its primary purpose is to protect you from liability. So let's say someone comes in and sues you as a business owner, it's going to protect them from going after your personal assets as long as you don't pierce the corporate veil. Now, along those lines of piercing the corporate veil, there's a few things you got to make sure you do to make sure you don't do that. And it's not as easy as just going to the state website and forming your LLC. You need to have operating agreement in place. You need to have bookkeeping being done. You need to make sure that you're keeping everything separate. Don't commingle funds with your business and your personal assets, stuff like that. So if you do all those things, and those are just a few that I mentioned, there's more things you need to do. Definitely talk to an attorney about the liability side to make sure you're protecting yourself. But if you do those things, you'll get that liability protection, and that's the primary purpose. A secondary purpose could be from a tax perspective. It allows you to make a special election on your taxes to be treated as either an S corporation or a C corporation. Okay, so an LLC is disregarded from a tax perspective. It doesn't even get recognized by the IRS at all. So by default, you're either a partnership or a sole proprietorship, and you have the option of becoming a corporation, a C corporation or S corporation. So that's ultimately the whole point of the LLC. Does that answer your question? And a common misconception, let me just debunk this, that an LLC allows you to write more stuff off. That is completely incorrect. I could write off just as much stuff in this S corporation as I can in an LLC. It does not matter.
So what's the difference between the S Corp and the C Corp?
The difference between S Corp and C Corp is one primary thing. payroll taxes. So let's say you made $100,000 in profit for the year, okay? You're paying 15.3% of that as payroll taxes, which is $15,300. That's just payroll taxes. This is if you're a sole proprietorship, okay? Now, if you're C corporation, you don't have to pay that much in payroll taxes per se. There's another difference between the C corp and S corp. The C corp has its own corporation taxes, so you're gonna pay 21% on your profit for the C corp, whereas the S corp, it flows through to your personal tax return, okay? And the whole point of the S corp compared to a sole proprietorship or a partnership is you're avoiding this 15.3% in payroll taxes. Not entirely, but pretty significantly. Okay. So yeah, the corporation, you're gonna ultimately end up paying a lot more in taxes. I've run a C corporation, I should clarify. You're gonna pay a lot more in taxes. I've run so many scenarios, a bunch of different possibilities, and you will 9 times out of 10 end up paying more in a C corporation if you're making a lot of money. Okay, so that's why you don't want to be a C corporation.
I get this question all the time. Benefits to opening up an entity in Delaware? Certain states, there's...
Now, yeah. I'm gonna caveat this answer with, I'm not an attorney, but I've talked to a lot of attorneys. So definitely consult your own attorney, and a good one. There's a lot of people out there that will scam you into doing a Delaware, Nevada, Wyoming corporation or LLC, okay? They are great at protecting you if you live in one of those states. If you don't live in one of those states, you're not gonna really see the same liability protection. So the only time that might make sense is if you have, for example, a rental property entity that's in multiple states. You could have the parent company being in one of those states, just in case anybody was ever able to pierce through the state entity for that particular rental property. But usually it's not gonna give you any better liability protection if you're not operating in that state. Reason being is when you're operating in a particular state, you have to follow that state's rules. And so you're gonna still be in their legal system. Whether the entity's formed in Delaware, Nevada, or Wyoming, or whatever. So, and you also have to register as a foreign entity in every state you operate. So you're gonna end up paying a bunch of corporation fees to the state of Delaware or Nevada or whatever, and it's all for nothing, really. Okay. Any other questions? Any questions on the Facebook?
None's coming in so far.
If you guys have questions on Facebook, definitely shoot them over.
So I get this question also, dealing with realtors.
Mm-hmm.
Well, more so investors. They'll have multiple properties and they ask the question, should they have them in separate entities? And then the tax benefits of doing that? Is there any tax benefits to having separate entities?
No. There's no tax benefits to having separate entities. In fact, it creates administrative nightmares because you might have to do multiple tax returns, have multiple bookkeeping files, a whole bunch of other stuff. So the main reason to do that is to separate liability. Again, anytime you have like different entities and a bunch of different crazy structures that you see companies doing and things like that, the main purpose is to separate liability. So let's say you have a property that's worth $1 million and net worth, so you don't have a loan against it. You probably want to have that in its own separate LLC, right? It will make sense to have the cost of administering your own separate company for that particular entity. If you have a property that's worth $400,000, but it has a $350,000 loan, so the net worth is only 50 grand, and let's say you have 10 of those, that's only $500,000 of net worth total. you could probably put all 10 of those into one LLC. It's just a matter of how much risk you want to accept in terms of potentially losing those assets if something was to happen and you got sued. So whenever you get sued, if someone wins against your entity, they can come after all the assets of the entity. But if you have assets in multiple entities, then usually, unless you are commingling funds again, and you keep everything separate, if you keep everything separate, you'll have that separate liability protection. So
that's why it's called a limited liability company. Because
Exactly.
that's what it does.
Yes. And that's why LLCs have become very common, because they're a little easier to form than corporations, and you sometimes don't have to do the annual reporting. I know in Arizona, you don't have to do annual reporting. I believe here in Kansas you do. Missouri, I'm not sure if you have an annual report or not. But yeah, I mean, ultimately that's the objective. Is it's a little easier to operate. I shouldn't say operate, form the entity, but you still have to do all the same things operationally. So some people think you don't have to do like bylaws and minutes and shareholder meetings and stuff like that. No, you do. You still have to treat it like a business, okay? But it's just a little easier registering with the state usually. And it's more versatile because you have more options available to you
Which one was that?
as an LLC.
What are some common mistakes you see in business owners that are just, they're easy for you to spot, but kind of misconceptions out there?
I'd say the biggest mistake that I see is people who are set up as sole proprietorships, single member LLCs, or partnerships, and they're making more than $50,000 a year. If you are set up that way from a tax perspective and you're an operational entity and you're making more than $50,000 a year, you should more than likely be an S corporation because of what I just explained. Payroll taxes. Whenever you're in one of those three entities, you're paying 15.3% payroll taxes on all your profit. In an S corporation, you can cut that down at least in half and much more depending on how much more you're making. So definitely very advantageous to be an S corporation. Most people miss that part of it and they waste a lot of money in taxes. Other issues that I usually see, people just don't take care of the bookkeeping. It's a very important thing to take care of. I mean, if you're gonna do it yourself, actually do it. You should know and understand where you stand in your business at least once a quarter, preferably once a month. I mean, you should put the time on your calendar to do it once a month if you're gonna do it yourself. If not, pay somebody to do it for you. Honestly, it's something that you need to make sure your business is actually profitable and that you're planning out from a tax perspective what you're gonna owe at the end of the year, so you don't get to the end of the year and get shocked. Because I get people come in all the time, we do their taxes, they end up owing 20, 30,000 because they weren't set up the right way or they didn't plan for it, one of the two. So you need to make sure you plan for it and know where you stand before the year ends, and then you get to do your taxes and you're screwed, so.
That brings up a good point. What questions, when you're interviewing CPAs, to ask? Because we're not versed in that world, and you're trying to find someone good to do your books, and you think they are, but at the last moment, at the end of the year, you find out not so much.
Yeah, so I mean, that's a tough one. I would say definitely make sure that they have that background and experience in doing bookkeeping if they're gonna do your bookkeeping. There's some CPAs that are really good at taxes, some CPAs that are really good with accounting. Very few, such as myself, are good at both. So I've spent a lot of my career doing both, and so I'm very knowledgeable in both areas. So if you find someone like that, that would be a good place to go. I mean, look at their background, kind of ask them about their background, how many clients they have, and you know, have they had any issues with IRS, all that kind of stuff, because that will help you to know where they stand. But of course, I mean, people can kind of say whatever they say to win the business. So you really don't know until you get going with them in a lot of cases whether they're good or not. But if you look at something that they give you and it doesn't look right, go get a second opinion. I mean, that's really the best thing you can do to protect yourself is just go show someone else and get a second opinion and ask, does this make sense? That just doesn't seem right. You at the end of the day know the best for your vessel. I mean, it's your business. You will know if something seems right or not. So, but yeah, that's the key. I mean, you just want to make sure you got somebody that is very knowledgeable in both areas because they're not really the same thing. I mean, they're related, but they're not the same thing per se. So, but, and yeah, asking them, if you start asking them questions about some of the stuff that I explained to you, for example, and you talk to your accountant about it and they don't know anything about it, that's another sign too. So, if they can't give you strategies and plans to actually save you money in taxes, that's probably a sign that you got the wrong person. If they're just doing your tax return and you never talk about what you can do to save money, it's not your guy. So you should always be with somebody who's gonna take the time to make sure you're saving money on your taxes. Because again, that's how you hashtag build wealth.
Are there different CPAs for different industries?
There are. I mean, there's definitely some industries where you need someone who specializes in that industry. I will tell you that most companies, though, anybody can help you out. So I mean, unless you're in a very, very specialized industry, and I'm thinking like healthcare, government, nonprofits. I'm trying to think if there's anything else super tricky out there. There's definitely some industries where it just requires a little bit of specialty to understand and know what's going on. But most industries, you can go to pretty much anybody. You don't need industry specialization per se. So, but there are definitely some CPAs that focus on certain industries and they create like a little niche within it.
Right.
For example, me, I do a lot of group homes. I do a lot of group home audits, and then also do bookkeeping and taxes and all that stuff for the group homes. So it's a kind of a niche for me, but that's not the only industry that I work with. I can work with any industry for the most part, unless you're super, super specialized. Any other questions at the moment?
Why do you create a holding company?
Why would you create a holding company?
Yeah.
You're asking a lot of liability questions, like attorney type questions here. Okay, no. Let's see. Holding company. Okay, so again, that's also something that you would do from a liability perspective, but from a tax perspective, it does have some benefits as well. So if the holding company owns a bunch of single member LLCs, then you basically have to do one tax return just for the holding company. Okay, so the holding company will then have all the profits and losses from each individual single member LLC flow up to it, because again, remember we said that LLCs are not recognized under the tax code. So anytime you have a single member LLC, it's disregarded as an entity completely, and all the money flows up to the parent company. Okay, that doesn't mean that you don't have to still keep separate books and records though. So while a holding company does give you the ability to separate liability, and it does have a slight advantage from a tax perspective, meaning you don't have to do individual tax returns for each entity, it does require you to still do all the same processes to make sure your liability is intact. All right. Next question.
Sorry, I was inviting people
No worries.
to.
So I guess, let me think of, well, I might be thinking of another question. Let me just think of something that I can mention. So I had a couple articles I posted recently on LinkedIn. So one of them would be business owners don't take trips, they take vacations. I'm sorry, I said that backwards. Business owners don't take vacations, they take business trips. So ultimately, that's a great article to read through. It's going to give you some thoughts on writing off your trips that you want to take. So ultimately, the objective there would be to have a business purpose for taking the trip. So if you, let's say for example, you have some family in Atlanta that you want to go visit, okay? And let's say you own some rental property in Atlanta. Well, each time you go there, you could be going to check on your rental properties, okay? Now, at most, in that situation, I would say you could probably at most write off 3 days of activity as a trip, business trip. The rest of it would probably be personal. But still, it's 3 days, and that saves you some money. Takes your airfare, takes your hotel for a few days, food, rental car, all that kind of stuff. So if you can come up with business reasons, good examples would be rental properties, conferences, trainings, business meetings. Like let's say you got a business venture that you're looking into doing, and you're going to meet with some partners, board of directors or board of advisors meetings. So again, I mentioned that every business has to have a board of advisors and have those meetings at least quarterly. The correct thing is at least annually. I suggest to do it at least quarterly. But if you do those, you don't have to do those at home. You can do them wherever you want. I shouldn't say wherever, preferably in the US.
Right.
So the IRS does not like international travel for business unless it's truly a legitimate reason to do it. So, but you can usually travel anywhere within the US to have your board meeting, and that'd be fine. So those are definitely some ways that you can go through and save some money on your taxes in terms of turning that vacation into a business trip.
So if you are a single member LLC, and then you may have gone over this before, but if you're a single member LLC and you have, is it still required that you have these meetings or have these
Yes.
Boards?
Yes.
So.
Yes. Absolutely. Do you want your liability protection? I guess is my question to you. Then yes. You have to at least have one annually. You don't have to do it quarterly, that's just my suggestion, because it's a great way to save on taxes if you're making a lot of money especially. But you do need to have it at least annually. Okay? And it can be anybody you want. It can include your family. So do you want to write off the travel for all your family? Well, invite them to your board of advisors or board of directors. They don't, the IRS doesn't require them to have any particular experience or skill sets. They probably should be at least young enough to actually give advice. Old enough, excuse me, I said the wrong thing there. But they should at least be old enough to give advice, so I wouldn't put your 5-year-old on your board. But unless you have a company that is 4 or 5-year-old children, then that could make sense. But other than that, you can definitely have whoever you want on the board.
I have a question online from Canella Bella.
Canella Bella.
If a business is already registered with the Corporation Commission, can the entity be changed to an S Corp?
What type of entity? LLC or corporation?
Doesn't say. What type of, if you could answer that to help us, Ms. Bella?
So, without the answer, I guess I can say this. If you're an LLC, yes. If you are a corporation, still yes. So if you're a trust or something like that, then no. So it just depends on what it is.
LLC, she says.
LLC, yes, absolutely. So, and there's even the possibility of, if you've been operating this whole year and it's looking like you're gonna make more than $50,000 for the year, there's even the possibility to backdate the S corporation election to the beginning of the year. But we gotta get on that right away.
Right.
Yeah.
Otherwise, that option's gonna go away. So.
She says, thank you.
There was another question that I had, and I was trying to remember. Give me a second.
No problem.
When should you bring a CPA in?
When should you bring a CPA in? Definitely when you start making money. Before that time, you may or may not need a CPA. It's up to you. But definitely once you start making a profit in your business, I would recommend you have a CPA. Although I prefer you to use a CPA, you can use any competent tax advisor. Don't get me wrong, it's not that you have to have a CPA, but just have somebody that is helping you with your books and helping you with your taxes, because most people don't have the acumen or the thought process to really do effective tax and bookkeeping, planning and all that kind of stuff. It takes a special person, honestly, it really does. So definitely get the help with your business.
Can you guys hear? I don't know if anybody can hear. A little soft spoken.
Soft spoken, I usually don't hear that, but okay.
And Star is asking, are you taking online questions? Yes, we are, Star.
Yes, we're definitely taking online questions. If you have some online questions, let us know.
Ben is asking, how can I connect with a presenter?
How can you connect with the presenter? I don't have it on the board. Phone number is 480-542-0404. Website, iljcpa.com.
Please don't write it up there too.
Are we gonna be able to read this?
Probably not. My handwriting's atrocious. iljcpa.com is the website.
We're talking to Ignatius Jackson, CPA out of Phoenix, Arizona. Here's his contact information. I'll also share it in my feed. Thank you.
So, realtors.
Realtors.
Let's discuss realtors, because a lot of us are set up as sole proprietors.
Yep.
Because they're just using their social security numbers.
Yep.
And can you speak a little bit about your suggestions for realtors?
Sure. Realtors, doctors, lawyers, all three of those professions are notorious for being set up the wrong way. It's a very common issue that I see whenever I'm doing a consultation or things like that. So if you're making a profit in your business, whether you're a real estate agent, doctor, lawyer, any of those, okay, you should be an S corporation. And the reason being, when you're a sole proprietorship, we talked about it earlier, you're paying 15.3% in payroll taxes as a sole proprietor, okay? So on $100,000, that's $15,000 of taxes. That doesn't even include your income taxes. Then you have to pay income taxes on top of that. So when you're S corporation, you cut that number substantially. How much depends on how much you're making, but you cut it substantially. So definitely beneficial to be an S corporation when you're in a realtor field.
Okay, so we're in the month of October.
Yep.
And some realtors, may not have known or may not know what they've made. If they do know what they've made, right now when you were talking about going and backdating it, that designation needs to be done this year for
Yes.
2019.
Now
will be backdated for 2018?
it depends. Now 2018 is a little tougher because as an S corporation, you're required to take a W-2 compensation.
Right.
And at this point, if you didn't actually do that, you're gonna pay a penalty by filing it late, and it just doesn't look good. So we're kind of too late to do 2018, but 2019, there's still time, but you have to be operating within an LLC in order to backdate it. If you don't currently have an LLC or a professional corporation, one of those two, then you're not going to be able to make the election and backdate it. But we can start it today and have your broker change over who they're paying to the LLC going forward, and then we'll be able to make the election for today going forward.
Okay, so they will need to because some states make, what's the difference between the designation of an LLC and a PA?
A PA was
Like a professional, because sometimes they
like an
won't,
association.
yes, because if you hold a license, would that pose issue? Because some states may not allow you to develop an LLC for you to be paid.
I usually see most states will allow you to be a professional corporation. Is that what you mean by professional association?
Well, yeah,
yeah.
either
Okay.
one of the two, because,
So yeah, professional corporation for sure you'd be able to make that selection.
okay,
A professional association, I'd have to look into that to make sure, but it sounds like you may be able to.
okay.
Yeah. There's also a professional limited liability company that some states allow as well. I know Arizona, they allow you to be a PLLC as realtors. So I think they allow you to be a PLLC or a PC.
Right,
So
that's
both of those still apply for the S corps.
because that's the way it is in the state of Kansas. Missouri, on the other hand, I do believe you can do an LLC
Okay.
as an individual, but, things change
Yeah.
so much, so,
I mean, there really is no difference between a professional LLC and a regular LLC from a liability perspective. The only difference is the PLLC usually requires you to have some kind of license by the state.
right,
That's really the only difference.
Okay.
So everything else will be treated the same from a tax perspective and legal perspective.
okay.
Got a
Yep.
question from Star Crawford.
Sure.
How much
Star.
revenue should I be making before changing into an S corp? One. What is and how do I prevent double taxation? Two. I'm an LLC and I put myself on payroll and I'm paying too much in taxes.
Whoa. Okay.
She's been
Concerned about that third one.
Yeah.
Okay, so.
That's why I told Star to come today.
So one, sorry, what was one again? You asked too many questions.
Yeah, I know. Okay, well, let's try back up. First question she asked was, how much in revenue before I should, how much should I, in revenue?
Oh, revenue before you should do
And
the S
change
corp.
to S corp, yes.
Revenue doesn't matter, profit matters. Just gonna tell you that. So if you're profiting more than $50,000, you should probably be an S corp. And when I say profit, just some people don't kind of understand the difference. So when I say profit, I mean your revenue is what you just sold to customers, okay? Your profit includes what you sold to customers, less expenses. And expenses will include things like depreciation and payroll and all kind of other stuff that you're doing for your business. So you gotta make sure you understand that profit, which is why it's important to understand, to get your bookkeeping done. Because you can't just count the money that you got brought in, you have to count all your expenses as well. So until you're making 50,000 in profit, probably doesn't make sense to be an S corp.
Your next
Second
question,
one.
what is and how do I prevent double taxation?
Double taxation is a C corp. So double taxation means you're paying taxes as a C corp, which is currently 21%. Is the corporate tax rate. Could change depending on how the election turns out, but 21% currently is the tax rate for corporations. Then on top of that, whenever you take money out of a corporation, a C corporation, just to be clear, you're paying dividend taxes as well, which are usually taxed at the long-term capital gains rate, which ranges between 0 and 20%, depending on your income. So that's the difference.
The third question, I'm an LLC and I put myself on payroll and I'm paying too much in taxes.
So that third one concerns me because that's actually illegal. As an LLC owner, you're not allowed to be on the payroll. So you just, if you're going to do that, you need to basically convert to an S corp. Reason being is that's the only legal way that you can be on the payroll as an owner when you're an LLC. That is a sole proprietorship or a partnership. Okay, it's a tax law that doesn't allow you to do that.
That's all
So-
she's got for now.
Okay.
Good questions.
But yeah, definitely, if you're doing that, I would definitely suggest we backdate your S corp election, assuming it makes sense to do that. Okay. Otherwise, we might have to fix the the fact that you paid yourself payroll. So,
That was good.
Yeah, good question.
That was really good. Okay, it was something, let me see, I had it, but then that whole thing right there just,
Stars on joke.
that just.
those are great questions.
So, okay, so when you have the W-2 income and you have, income from an LLC.
Mhm.
Now, if you're filing jointly as a married couple.
Yep.
Does it make a difference if you file, as an S corp or a LLC, if your profits are less than 50,000? Is it better for you just to leave it as a LLC? Or with that added income, would that make a difference? You follow what I'm asking?
So I believe, let me try to repeat this, make sure I'm understanding. So you have a W-2 job, and then you have a business on the side that is just an LLC.
Right.
So basically a sole proprietorship.
Mm-hmm.
Okay. It could be owned by you individually or by you and your husband.
Correct.
Either way. Okay. It does have a potential to save you money on your taxes, yes. Reason being is if you have a loss in that business in the first year, it can help you to offset some of your W-2 income. You just have to be careful with that you don't want to have losses in your business for more than 3 years unless you're really showing improvement. So what I mean by showing improvement is you're getting more revenue coming in. Let's say the first year you had $5,000 in revenue. Second year you had $10,000 in revenue. Third year you had $20,000 in revenue. At least you're showing improvement, and hopefully your losses over time are also going down, right? So your losses shouldn't be going up over time. They should be going down. So as long as you're showing positive results, even though you have losses for 3 years, the IRS, and you can prove that you're truly in it for profit, the IRS will give you more time to do it. So a lot of people think you can't show losses for any more than 3 years. That's not correct. It's just a general, that's just gonna kind of flag it a little bit, and you might get asked some questions about it. So, does that make sense?
Mm-hmm.
Does that answer your question?
It does.
Okay. All right.
Another question from Kimberly Warner Wilson. Hello, I'm a C Corp. Can I use the deductions of my business expenses to maximize my tax return?
Yes. Any business entity you have, you can take just about the same deductions. The one difference is C Corps allow you to take tax-free fringe benefits as an owner, because you're also an employee of the C Corp. Okay, so that's the only exception really to that rule, but generally speaking, you can take all the same deductions regardless of what type of entity you are.
And Star has another question. I think you might have answered it though. How far can you go back, date the S Corp?
Again, so the rule is a maximum of 3 years. But you would have had to have been acting as an S corporation for that whole time. Meaning you've paid yourself payroll, you filed extensions for your return, you filed your S corporation return, all those things, you would have had to be doing all those things. So if you weren't doing all those things, the most we were usually gonna be able to go back to is probably the beginning of the year.
And then Kimberly Warner Wilson, tax return from W-2 to be specific. I've been in business for 2 years, still having losses. She was
You're talking about losses for the C Corp. No, you cannot use those C Corp losses on your personal tax return to offset W-2 income. That's another disadvantage to C Corps. If you have a bunch of losses, you don't get to offset that with your W-2 income. So it's definitely more advantageous if you expect losses in your business in the first few years to be a sole proprietorship, partnership, S corporation.
Thank you.
Why would somebody choose a C Corp instead of?
Because they got bad tax advice.
Okay.
That's honestly, I don't have any better answer for you on that. The only reason you need a C Corp is if you're planning on getting a bunch of investors, okay? Because it helps, it's a little easier to deal with cap tables and having a bunch of investors and doing special stock options and stuff like that. So C Corps are great if you're gonna have a bunch of investors. They're also great if it's a part of a retirement plan, which is kind of next level advanced. But it's also great in that situation. And it can be great if you're a big corporation where you're gonna have a ton of employees, you're gonna have multinational operations, and at that point, you don't care about that kind of stuff. So those are really the only times that it makes sense to me. If you're gonna be the only owner though, the only investor, you might have some debt, things of that nature, and you don't have like some ambition to have a bunch of investors, you should not be a C corporation. It's just a bad strategy all around. And I think she's finding out based on her question how bad it is for her, because she's paying a ton of taxes on her W-2 income and can't use any of that losses from her C corporation.
So if you,
Now,
go ahead.
One more point on that. When you do eventually start making money in the C Corp, you will get to offset those. But I got bad news for you. If you just shut the C Corp down and you call it quits, those losses are gone forever. You do not ever see that money again.
And her follow-up question, can I now switch to an S Corp retroactively?
I know that sounds tricky.
Yeah, it does.
We could, the answer would be not for previous years. We could probably do it for this year. I shouldn't say probably. Yeah, I should say probably. So the reason I say probably is because the IRS has to accept the late election. It's not a given. So we have to file a piece of paper and prove to the IRS that we were intending to be an S corporation. So there is a possibility that they could deny it, but in doing a lot of those over the years, I haven't had them deny one yet.
They're also great if you are seeking a business loan.
C Corp, to have a business loan, I don't really agree with that. And actually the person that's videotaping me is probably the better person to answer that question, because he does lending. But I don't think that C Corps are gonna give you any better loan options. And my lender here is confirming my statement. It doesn't matter what type of entity you have. What matters is, one, your business credit, and two, if you're personally guaranteeing your personal credit. Those are the biggest things, and your income from the business, obviously. Those are the things that are gonna matter. So. Did I say that right, Mr. Business Credit Works?
Yes, that's
Okay.
correct.
All right.
How are we on time?
We have about 10 minutes left, if there's any other questions.
Any questions online from anyone? There were some good questions,
There are.
very good questions.
Yep.
Just want to say again, we're here with Ignatius Jackson, accounting, CPA, president. He's out of Phoenix, Arizona. This is information. If you want more, Kimberly says she will call you.
Perfect.
Yes. I know everybody heard Daryl in the repeat of the information. He has a voice that carries. You should be reading books.
He does have one of those voices.
He has a voice.
Yeah,
That's
he has
okay.
Mm-hmm.
How does Daryl start? Hey.
The star says you're hired.
Right. We need to find you a manager.
A voice job.
Yes, you have one of those voices. We were just given some information about realtors, Deanna. So make sure you contact Ignatius if you have any questions. It was good information.
Canella Bella will be calling as well. Star goes James Earl voice. It's
James
early in the morning.
That's what I was thinking. That's what I was thinking. James Earl Jones, yeah. Yep. Any questions? No? Okay.
Okay.
We'll talk, Kim. You were saying that differs from what Kareem shared about the loan. We'll talk.
Yeah, I did mention that earlier, but just another
Before you sign out.
reminder. Is this,
Yeah.
you can view it?
Perfect.
Okay. So on November 9th, from 9 a.m. to 12 p.m., here at Wingman Realty and ASAP Tax Professionals, which is 5008 State Avenue in Kansas City, Kansas, we'll be having a 3-hour workshop. That 3-hour workshop is going to give you a lot of great information. We just grazed the surface here today. I mean, there's definitely some good questions, but if you attend this 3-hour workshop, you will leave with a bunch of strategies that will save you thousands. I'm not talking about hundreds, I mean thousands on your taxes. If you're profiting money in your business, you need to be at the workshop because you're probably wasting a lot of money.
Tell them your Facebook name where they can go to the event
Yes.
and purchase tickets.
So Facebook, you can find me on @IgnatiusCPA is my symbol on Instagram, Facebook, and Twitter. So if you just search for that, you'll be able to find my business. On there, it has the event posted, okay? Also, it is posted on Eventbrite. So if you just search Eventbrite for Small Business Tax Workshop, I think I'm probably the only one that's in the area. If not, there's only a couple, so it should be easy to find that way. You can also, I have a link. It's bit.ly/ILJ CPA workshops that you can go to as well. But yeah, easiest way would probably be to just go to my Facebook, Instagram, or Twitter page, and you should be able to find the links there.
I posted in this also. And Bella has another question. Would it be advised to start a new business as an S corp?
It depends. Are you currently just a sole proprietorship? Yeah, sorry, the air just turned on. Hopefully you guys can still hear me. If you're currently just a sole proprietorship, absolutely. If you're currently a business, like an LLC or a C Corp, I would recommend just converting that over instead of starting a new business.
She said she'll be calling you.
Yeah,
Sounds like she needs some one-on-one advice.
most definitely. So I offer a 1-hour consultation for $75, just so people understand what that would be. If you sign up for additional services on top of that, that first $75 is going to be credited towards that, and which will make the first hour free, okay? But it is a $75 fee just to have a 1-hour consultation. If you just want a 15-minute conversation with me, you can just give me a call, and that will be free, okay? I guess along the same lines, I'll also mention that people are often afraid to go to a CPA because they're expensive. I'm not super expensive. I'm actually relatively, I wouldn't say cheap, but good. I have a good price for the service and value that I'm bringing to you. So it's worth giving me a call. You might be surprised at how reasonable it can be. And ultimately, I'm going to save you money, whereas you could pay somebody else a cheaper price, then you're not saving money. So just think about it that way. If it goes somewhere and you get the best, lowest price, you may not, in the end of the day, be saving yourself any money. So. So I guess I'll leave it, I'll just say one more thing to kind of end it off since somebody else has any other questions. Retirement is a great tool that I think a lot of people forget about. Having yourself, if you're a business owner with a retirement account, and there's different structures of what you can do, but if you combine an S Corp with a 401k, for example, you can put a lot of money away into your taxes. A lot of money, and save yourself a lot of money on your taxes. So just keep that in mind as something else that you can do. And don't think that you only have to invest in the stock market. there's a lot of other things you can invest in by self-directing your retirement. Okay, and so when you put money into it, it's not like you're losing it and you never get to really see it again. It's still your money. It's just deferred a little bit, and there's still some great things that you can do with it to help build your wealth. Again, hashtag build wealth.
And then the question was asked, will the service work in different states? Oh, yeah, he's in Arizona. He's in Arizona too.
Yeah, so it doesn't matter where your business is, I can help you out wherever it is. I do spend probably once a month roughly, I'm here in the Kansas City area. So the two most places that I'm most commonly at is Kansas City and Phoenix. But if you're wherever you are, I can definitely help you out.
Make sure you say your name and your phone number again before you sign off.
She says, okay. And then Kimberly Warner Wilson, I'm glad I caught this live. Thank you very much, Daryl. You're very welcome. You have some great information.
Yes, please share it. I mean, share it to your networks after it gets posted, and make sure that everybody kind of understands and sees it. It's definitely very useful. You guys asked some really important questions that I think a lot of business owners have, and so definitely thank you for those. So we'll just end the workshop though, since there's no more questions. My name again is Ignatius L. Jackson, CPA. Phone number to give me a call, 480-542-0404. And on social media, you can find me by typing in @Ignatius CPA. So IGNATIUS CPA. Okay? And thank you guys for tuning in, and we'll see you next time.
I am gonna ask the question, I'm gonna close this out, but I'm gonna ask a question about real estate investors.
Okay?
I'm closing this out though, because y'all should've came to the class. November the 9th, we'll see you from 9 a.m. to 12, and you get that information about real estate investing. Bye! No, but seriously, because I got, they should be escrow